Good morning. My name is Pat Hatzenbuehler. I'm an associate professor and extension specialist for crop economics at University of Idaho, and I'm happy to be here for this Western Extension Risk Management Education program webinar. Happy that Ariel and Connie invited me to present today on using point of sale systems for farm business risk management. And this um, presentation and builds on material that I helped develop with another team on another Western Extension Risk Management Education Program project from a few years ago. So I'm happy to be able to share our work and findings and hope that this is interesting for you all. The project, well, before I get started, uh, the uh, the presentation will have basically three main aspects. So we'll have start with point of sale system basics, just an overview view, get in the same page about what we're talking about with point of sale systems. The second one we'll talk about farm point of sale systems and business management, how those systems can be helpful for managing farm business. And then the final part of the project more ties into this um, Western Extension risk management education type of theme of risk management and how POS systems can be helpful for managing risk from a farm business perspective. So let's get started. Hope you all enjoy and learn something new here today. So point of sale system basics, a few concept definitions here to start, just bit basic. So point of sale, basically just the point at which something is sold, so the time and location at which a sale occurs. So obviously that could happen with a cash sale too, but the POS system is such that there's hardware and software involved and such that the point of sale and gets tracked and recorded um, in electronic log. And so here's an example picture in which they're using a chip machine, but a lot of systems now have the tap, which we're familiar with, the debit card or credit card. And so um, basically point of sale systems have that integration between hardware and software such that each sale is recorded and information about it is recorded, and other things that we'll get into can also be recorded. So the components, here's an overview in terms of the steps in which a customer swipes or enters their card information or taps. The device hardware either could, be a tablet or hardware from a system, a POS system. Could you get tracks that credit card information or debit card information, sends it to the customer's bank. They either authorize or decline it. We'll get into some of the issues with declining a transaction, how that would be different than a cash transaction, how customer relations may be important if you're moving from a cash base to a POS type system, things to take into consideration with those customer interactions that are kind of new with these type of systems. But just moving along through the system. So once the bank authorizes it, goes back to the device with um, some message about that, and then the merchant receives some information, and then the bank customer bank sends it to the merchant's bank, and so there's that interaction through the networks of the banking systems and the software system. So in a broad sense, as I mentioned, there's hardware which is at the market. It could be on a smartphone or a tablet, but it also could be a POS system type of hardware, which is specific to a type of system. But then also at home, there's a laptop or a desktop type of computer in which you're able to access the software both on that app or through a computer desktop system. And so there's through the integration of hardware and software of different types, you're able to gather information from the point of sale and then utilize that information. And we'll get into how that can be really helpful um, for business management. But before we do that, we'll talk about that there are different types of POS systems. Each has different pros and cons, as you might expect. So here's a list of some popular ones from Grow NYC. And they list pros and cons for each. They all have different cost structures, different features, um, whether they do inventory, for example, whether they do EBT related to food stamps or not, whether there's integration with accounting software, all of them in this case do, which is, we'll get into how that can be really helpful. And then what the extent to which customer service is available and the quality of it varies across these systems. So there's, as you might expect, different types of systems that you might have heard of, Square being a very popular one, but there are others, and depending on the type of your business, um, you may want to investigate. So I won't spend too much into this, but just want to make this point here of choosing a POS system should really, ideally, be driven by your goals and objectives for your business. They may not only be profit likely, but also, serving your community, providing food or different products to your community, and having some kind of growth goals to, provide some economic opportunities for people in your community, things like that. So usually goals are more broad, and then there's specific objectives that help meet those goals. And so those objectives are usually much more targeted. So smart objectives is what we usually like to think about in terms of their specific, measurable, achievable, realistic, and timely. And so, for example, if you want to produce this amount of a certain crop that fits within the context of your farm, and that your soils are adapted to it within this kind of crop year in which the crop can grow. And so that's kind of an example, so that you can be able to sell at your farmer's market and meet your goal of overall building your business and sustaining it over time. So also helpful, not only once you thought about your goals and objectives, can be reaching out to your peers to think about what other people are doing some research in terms of what's been successful for different types of businesses, especially ones that are similar to yours. Consider that. One survey by the local food marketplace, which was a national online survey in 2020, in that kind of COVID time was implemented. So they had about 1,300 respondents. At that time, about 60% of producers that sold in person used a credit card reader. So that was about 3/5. And then of those, about 80% used Square. And we'll get into a little bit later that we did an interview with our project with the local food marketplace CEO and asked why Square was so popular. And they explained that it was well known and it's simple, it's customizable, and it can serve customers quickly. So in that case, it integrates well with a smartphone, so you can go to the customer and meet them where they are, as being a good feature. Doing some, more investigation beyond some survey. We um, did some with our project in terms of, we did some video interviews, which I kind of alluded to, but we did some more in example. And so we have a resource that I'll get into the very end of my program, of this presentation, of the program, that hopefully you can investigate if you want to dive deeper. But there's quite a bit more materials that we'll get into later that can be really helpful for choosing a system that fits your business needs and goals. There are other types of research, not only about who's using what and why, but also associated types of information out there. So this kind of survey-based research from Madison, Wisconsin Farmers Market in 2015, a little bit older, in that case, only 21% of vendors were using credit cards. So that was about 10 years ago. You'd likely expect that share to be, or that percentage of to be higher now that it's becoming more commonplace. But these kind of types of research on not only the usage of point of sale, but also the um, um, associated types of things about what's being effective and who's spending more money can come out through the research. And so you're likely to learn more things beyond just what types of system would work for you, but also some other strategies for business. So in this case, the types of customers that spend more money were older shoppers, those with higher income that which you would expect. Those that were more familiar with the vendors tend to spend more money, and those who bought value-added products and people who eat more fruit and vegetables. So not things that aren't super surprising, but things to keep in mind in terms of who may be most likely to spend more money at your own business. Um, so one big theme about this presentation will be the importance of getting data and the POS systems being so incredibly helpful with getting data on and different types on sales, on customer characteristics, and well as inventory. So the sales, they can track the paid products that are sold, including delineating by product type and then the date and the location. So which farmers markets you're selling the most at, what products are selling the best, can keep track of those things. Great. They can provide information such as receipts, which provide the customer information about the sale. Those can be provided by email, but also, if they provide their contact information, gives that opportunity to be in touch with that customer in the future, which may be something different, as well as some inventory management about what was sold, what you have left in storage, if that's kind of how your business operates. Um, but one point about this is that you have to spend money to make money. So each of those POS systems have costs with them. So they all have processing fees. They kind of vary, but as of 2023, Square charged 2.6% plus 10 cents per swipe, tap, or dip. Um, they also often have subscriptions for extra types of things, especially like employee management, some of those more complex types of elements that may or may not be worth the money depending on your business structure. And they also have hardware, like we mentioned, so that costs money as well. So whether it be a smartphone, which you may already have, those cost money, tablet, but also POS systems. Some of the companies have their own individual hardware, which also costs money, and so maybe worth experimenting. And as I kind of mentioned about there's evidence that going to the customer rather than waiting in line can help with increasing sales. So the different hardwares can have different attributes, depending on how you set up your business, and how the kind of sales are implemented. So integrating that hardware with actual sales patterns can be useful. Um, Kind of a broader point or background thing but just to take into consideration is there support like where you do business. So there's farmers market or maybe an expo center, convention center, um, other kind of venues, like what kind of Wi-Fi is available, what kind of electricity is available, um, whether those POS systems, how they transmit data. Do you need the data immediately or can you wait until you get back online? Are they in a rural area or urban area? Things like that can be worth taking into consideration. And then also, is there help for you if someone um, is there to kind of troubleshoot with regard to the infrastructure at the market, just to make sure that the system that you've chosen works like you're expecting it to. So, if this is new, then change is inevitable, but how can you make sure that that change is good? So learning something new is always a challenge, but it can be a worthwhile thing if it's worth it. So not only change in terms of using a new tool or a new system, but also that change in interacting with a customer. So this example of moving from cash to a card-based system changes your interaction. You learn more about the customer, which may take some extra um, kind of empathy, I guess, in terms of whether that the credit card gets declined. Um, how do you interact with them and move forward and such that you maintain a positive relationship. Also, if you have employees, you're going to need to train them about how the system works, make sure that they're implementing it effectively. That would take some time. And there also might be a change too in terms of you currently might have a website or a Facebook page that has some information about your business, but you're not really doing some advertising or customer interaction. But with POS systems, you could have the potential to be able to do some targeted advertising, which be new thing, maybe some open some opportunities to make sure you ensure some sales, especially with those customers that you build a relationship with, given that you might get some contact information through these systems. So a lot of new elements related to not only management, but also customer relations that are worth considering. So I guess a summary, integration of hardware and software. There are a variety of systems. Choosing them is basically based on what your goals are for your business and your objectives. And then there are benefits and costs to all of them. But a main point is that tracking and quantifying sales and other information, the data that you could get from POS systems can be super powerful, especially for business management and planning, which is the next part of this presentation. Excuse me. I'll take a little pause here as we move forward with this idea of using POS systems to manage farm businesses. So here's a resource from around 2000 by Holcomb and Muskie, basically kind of coming up with a business plan and some elements. So this could be either developing a new business, but also could apply to developing an expansion of a current business or even, yeah, some kind of forward-looking plan for an existing business. And so the target audience for this kind of thing could be your business partner or a prospective business partner. It could be a banker, a lender, something like that. And so if you want, you're basically wanting to be able to provide a description of your business as it currently stands, and then the plans moving forward. And so these are the kind of elements, some introduction, summary, situation analysis, business proposition, action plan, financial analysis, evaluation and measurement, and contingency plans. And we'll just describe each of the bolded ones in a little more detail. So situation analysis basically describe the context of business, who is involved, where it is, what the kind of opportunities and risks are kind of out there. Business proposition gets back to that goals and objectives for the business. Action plan describe the activities that are either planned to achieve those goals and objectives. Financial analysis is more in-depth analysis of how the business is performing. So it include things like income statements, balance sheets, those kind of things that would be from an accounting perspective, give a view of how the business is performing. Valuation and measurement are how are things going, basically, in terms of are you meeting the quantitative goals that you want to be? And then contingency planning is, we're not really meeting the goals. And if something happens, what are we going to do? And to get back on track or back toward those goals. So having some kind of plan in place in order to move forward. And so I kind of group these kind of things of components of a potential business plan into like planning more backstage type of things about um, taking stock of how things are going, what you're planning to do, and then um, more kind of on stage things in which you're actually doing some business, doing some performance, and then doing some real-time analysis about, okay, now we're beyond the planning, we're actually doing things. How are we doing? And how is if things are going off track, how can we get back toward where we want to be? So POS systems can be very helpful for all of these things, is kind of a main point. So here's kind of things in terms of the planning, taking stock of the current business. So just knowing the baseline where you currently stand is a prerequisite for making future plans. And so POS systems can be really helpful for providing reports on all kinds of things, what the sales are like, how they've been trending, how people have been paying, being sold, all kinds of things. And just to take in consideration, what kind of information would be most useful for you, to make to get an accurate assessment of where you currently stand. Maybe again back to influential about picking which POS system you choose. And then also taking stock of your business includes some of those key accounting um, principles. So those and documents that key partners such as your lenders um, would be familiar with. So they would like to see your income statement, your balance sheet, how your cash flow is um, um, evolving throughout the business season or throughout the calendar year. Um, and the integration between your POS system and those accounting software can be really helpful, such that it's a little bit automatic, such that the data from the POS system gets uploaded into the accounting system. And so if you need an income statement or, snapshot of where you currently stand with regard to your income and liabilities, then you can get those readily and easily. Um, in terms of doing the actual implementation, moving toward those POS systems can be helpful for providing receipts. So that's um, customer interaction. How do you want that to be? What kind of information do you want the customer to receive? Things about the transaction, how much was sold, what was the price. You could include your logo, your own contact information on there. You could also be managing your labor, whether you're employees through POS systems, who else is going to be involved in, who's doing it? Is it going to be you? Is it going to be employee? And how are you going to keep track of that? The one kind of interesting aspects of certain POS systems is they can link sales data to employees, and so you can keep track of who's being really effective in certain aspects of the business, and then provide opportunity for some incentives for that type of thing, and also some kind of technical things too about tax management. Some of these things, POS systems can be helpful with doing those taxable sales, and integrating those with other kinds of tax types of documents, like more on an annual basis, for example. So beyond the planning, the actual implementation. So here we're getting into looking at data. So you're doing some actual sales, which I have on the y-axis, and you're plotting them over time. You're looking at data. And so maybe sorry. So maybe you're looking at this product in which you're increasing sales up to a certain point and then it became flat. And so you might want to look at that and say, oh, suppose I didn't only bring this amount. If I continued to bring more, then I might be able to take some of that um, opportunity for expansion, increasing my sales if I were to look at the data and see if that increasing trend were able to continue. And then also if there's another product where it's really, expecting sales of a higher amount, but they're actually really just averaging quite a bit lower. So you look at the data and you say, okay, this is not meeting um, my expectations. So should I make a change here? Am I covering my costs? Is there anything I can do to increase the sales? If not, then maybe I should make an adjustment. So those kind of things can be helpful for identifying which products are selling well and which are not. Um, and then making adjustments based on those data about your own business structure. So if you have a farm, for example, you'd potentially adjust next year about the acreage or the amount of space that you're allocating to certain crops versus others and make some adjustments there. So influencing not only what you're selling, but how you're producing and how you're managing your farm in terms of from a production standpoint. And then also some financial considerations about our um, uh, cash needs likely much higher in certain times of the year, especially like at the beginning of the growing season. We need inputs, seed, fertilizer, labor. Things are much higher, at the beginning of the growing season, and you're not selling much at that time because things haven't grown to that degree. And so looking at those periods when you might need a loan for some cash till you make some sales, and then you can repay that loan. So those can be helpful. Contingency planning. This is just kind of example, but about like integrating online sales and point of sale systems. So maybe something happens where you sell something online and then but you had it at the farmer's market and so that you could no longer sell it either online or vice versa. So like what do you do in certain things? POS systems can kind of help you keep track of those of it. They can um, identify if a sale happened online, and then you can work with the customer either online or in person to try to either provide a refund if that's warranted or some kind of other method for resolving a situation. But that was just an example of like how things could maybe go um, not to your expectations, but these kind of systems can help you be adjust and make maintain your customer relationships. So just this broader point here, knowledge is power, Sir Francis Bacon quote, and I would just say data are powerful and they help you tell the story of your business and that kind of story with accurate, clear information can be really powerful for telling your partners, those who are involved with the success of your business, what you want to do and where you want to go. So, not going to get too much into the summary because I think we went into it, but POS systems can be helpful with every aspect from planning, implementing, monitoring, and evaluating your business. They provide key data um, on different aspects, and you can get very complex into not only sales but also inventory, labor management within them. Usually those cost some money, but they may be worth it depending on your business. And they can sync with other types of software that are commonly needed in order to manage business, especially those accounting reports and software. And so all of this can be essential for reaching business goals. So the last kind of substantive before I get into the resources type of the part of the presentation is about risk management with POS systems. And I base this portion of the presentation based on agricultural risk. And so the U.S. Department of Agriculture Economic Research Service defines five main agricultural risk types: production, marketing or price, financial, institutional, and human and personal. I underline these three. Those are most related to a large degree to, I guess, in a direct sense to the POS systems that I've been talking about, but the institutional ones, very important things like tax changes, even though they might not happen every day, something to keep in mind, maybe over the course of a couple years. Um, and then human and personal health and relationships talk a lot about customer relationships, but also with your partners, with your employees. Those things are definitely valid for considering, and all of them are important, but I'll just go in more detail with production and marketing or price risk given and financial risk given that it's aligned with what I view as the Western Extension risk management education priorities and things. But production risk is basically what you might expect in terms of doing production, but it's not. It's uncertain and um, might deviate from what you expect, and that could be due to weather, natural disaster. It could have hail, for example, or flooding. You could have disease and pests, and often those things interact with each other, and so they're not um, isolated, just one thing happening at one time. And this is just a plot of corn yields for the U.S. Based on historical data. So most farms have yields that would, you would expect about 150 bushels if you were just to kind of randomly pick a farm in the U.S., a corn farm. You expect based on the data about 150 bushels, but there are some farms that have much lower yields, and every now and then that happens. So they could have a tornado come through, knock out a lot of acres or something like that. Um, and then you can't even harvest, and so your average yield gets becomes a much lower. But anyway, that's kind of a um, portrayal of the distribution of what could potentially be the yield. It could be higher than expected, it could be lower, and that's kind of a natural part of agriculture. So, um, tools and strategies for managing POS or managing production risk and how POS systems can be helpful. So tools and strategies, diversifying so that if one crop isn't growing very well, having multiple crops can help um, spread some of that risk around, so that hopefully the other crop is performing better. Insurance products, especially some of these revenue-based ones, which I'll get into more detail in the next slide, can be helpful. And then a longer term kind of considerations about like improving soil health, which can maybe help with water moisture or soil moisture, water retention, and prevent the extent to which the natural disaster kind of events can have a huge impact. But how can POS systems be helpful? Um, they help categorize different crops in terms of keeping track of what's selling well, how many crops you're growing over time, and how that uh, relates to what your revenue is. Having that kind of information, keeping track of your revenue over time, which is important for reporting as we get into, especially for some insurance products. So these insurance products, especially for more of the small farm realm, although this whole farm revenue protection program, um, which is basically like a revenue insurance product based on revenue, but it's based basically by crop. And so there's a diversification requirement in which you report revenue from the set of crops that you're growing. So suppose you had 5 crops, you get revenue from each crop, and you report the revenue for each crop. And you need 5 years of tax forms for those, although there are some exceptions, but it's a bit difficult for those newer businesses who don't have the data yet. But importantly, you need to report both the price and yield for that commodity. And so the price information can be really simple or much easier from the point of sale type of system because you get it directly from the data. And so if you need to report that information, you just take it from the POS type of report, which can just be helpful with applying for the program and also reporting if there's a loss, like how big that loss is and what kind of payment you could get if you qualify. The microfarm program is pretty similar. It's just for smaller farms, much less revenue, and requires fewer years of tax forms, and they're also reporting is less intensive because you're not reporting based on per crop, but also your whole revenue. So that program may be useful depending on your business type. So the benefits of these, they provide, just like any type of insurance, they provide a payment if something bad happens, which can help you weather certain and not be exposed to certain other risks, like financial risk, for example, getting into the default problem if you can't make a payment on your loan, for example. Then these kind of products can be really helpful if things don't go to as expected. Costs, they are subsidized, but you still have to pay for them. There's requirements for reporting, which can be difficult. And then there's some technical things about if you're growing, then it may not fit, because they're basically looking at your business from a certain perspective and what you would expect. And so like the growing businesses may not fit these kind of programs. There's some issues with that. So marketing or price risk. This is about uncertainty for the sales and the price at which goods will sell. I won't play this video, but it's basically a video of Rexburg, Idaho, starting their farmers market. And the day they started, it had a horrible windstorm and thunderstorm. And so sales at these newly formed farmers market were just a bit more disappointing. And those kind of things can happen, but it's just uncertainty about whether sales can happen and the price at which sales you can get for those is uncertain. So strategies for dealing with those, trying to do some forecasting, which we'll get into in a minute about what to expect. So, and whether certain days will have more or less sales, whether you can predict that, and it might help from a inventory management and things like that. And POS systems can be helpful again from getting data about tracking certain types of markets or certain types of days in which you might have more sales or less sales. Financial risk is uncertainty with regard to interest rates, credit availability, and ability to make debt payments. So you don't want to get into default situation in which you're behind on your debt payment. I have this graph here of interest rates for different types of agricultural loans since 1990 through 2023. So we have this trend here of downward. So maybe around 2020, you're thinking, oh, these interest rates are going to be around, no way there would be more than 7% since we haven't had that for 10 years, 12 years. But boom, 2023, those increase, and then it makes it more expensive to borrow money. Those loan payments for new loans will increase. And so that kind of risk is always there about what happens in the capital markets may influence loans. So some tools and strategies for dealing with financial risk. Again, doing some forecasting about when you're going to have cash available can be helpful. Developing a cash flow budget can be helpful for especially identifying those times when cash is needed to make purchases and whether the sales align with those things. And POS systems can be really helpful for those for, again, quantifying what's been sold before, what the kind of typical cash income is in certain months, and then so that it can be immediately available to assess. So this idea of forecasting with trend analysis. So look at this kind of thing that I developed is this kind of um, data set that you might get from a point of sale system. So such that you have your week here for a growing or a farmer's market season starts in week 1 through week 20. And these are the sales amount for certain products. And so I just basically plotted them using Excel. The sales amount is on the y-axis and the week is on the x-axis. And so did the trend line using Excel tool. And it's basically the sales are equal to 0.51 doing rounding times the week, which is the x variable plus 5.97 98. And so you can use that kind of trend to forecast what your sales might be in the next week. So week 21, we're looking out, we don't know what week 21 is. We just know from week 1 to week 20 what sales have been. But using this kind of information about how the week is related to the sales, we can do some forecasting. So we want to say week sales in week 21. And so we basically put 21 here, which is the new week, and we multiply that by 0.51, which was the parameter for associated with the relationship with a week, and times 21, and we get 10.65. And we add that to the base value of 5.98. We get this overall value of 16.63, which implies that you need to bring 17 to your market in week 21. So you can do those kind of analysis based on trends for different products to help manage those kind of things. Here is a similar kind of one, but accounting for common events. So you might look at your sales and just see some patterns. So again, for this example, I have week again from 1 through 20, but in some weeks there tend to be low sales, and some weeks there tend to be high sales, and then in other weeks they're about like 5 or 6, So and it turns out you just look at the calendar and you say, oh, there was a holiday that day. So, but there weren't the other days. So every holiday, I put a 1 here. And every other week, I do a 0. But then you look at the other is, oh man, the weather was bad that week, but it wasn't bad the other weeks. And so you put a 1 for those weeks where bad weather. And then again, you have this plot here of what it looks like. Normal week would be about 5 or so, between 5 and 6. Some weeks you have 10, some weeks you have 1. A lot of variation in there, and it's likely related to these variables that you identify as important. So did a regression basically with those data with sales, and then you get intercept parameter, and then these 3 variables, which were the week, the holiday, and the bad weather. So that week wasn't important in this one. There wasn't a trend that it's increasing or decreasing over time, but really just staying flat. And so that in that sense, week is not really a variable that's adding much information. It's not statistically different from 0, but holiday is, and bad weather ends up being important. So in this case, for each holiday, sales were about 5.19 higher than normal. And then if it was bad weather, then the sales were about 3.64 lower than normal. And so you're looking at week 1 and week 21. You don't know what's going to happen, but this week is a holiday. So if it weren't bad weather, you would expect 5.19 higher. But you check your phone and whether bad weather is likely. So you put a 1 in for both of those, and then you add up the base value plus 5.19 minus 3.64, and you get 5.96, which implies you need to bring at least 6 to the market in week 21. So these kind of data can be really helpful for recognizing patterns, doing some forecasting, helping you manage your inventory and sales. So summary, point of sale systems provide critical data for managing production, market price, and financial risk. Quantified data can be essential for many things, meeting requirements for reporting requirements for insurance products, planning inventory and transportation requirements from day to day and week to week, identifying popular and problem products for planning in the future with regard to production, and then also communicating, telling your story about where your business stands, what you want to do in the future, and why the business partner should believe in you and provide you with additional funds so that you can expand and follow through with your goals. So I'll close this with some resources that we put together through our program. This was our team. Russ Tronstead was the project PI at University of Arizona. Here's me, John Hewlett, University of Wyoming, Becca Jablonski at Colorado State University, and Shannon Sand at University of Nebraska, who was at Hawaii when we started the program as part of the West, and now not quite part of the West. But anyway, we have a website in which we have these materials on there. It's called pos-systems.farmmanagement.org. And on there we have these recordings and kind of a lot of text, but basically just in not to get too go too long here, just overview of POS systems with the farm business sales, POS systems with and accounting and record keeping, and especially within the context of some of those insurance products. POS systems and farm business management. So these are experience of using sales POS systems for actual farm business management for small farm businesses. And then the last one was experiences with those farm insurance products and farms of different types and how those interactions and experiences differ based on the structure of the different farms. There are other resources on video, kind of went over that before. Also a lot of reading materials, POS system user guides and manuals, farmers market associations put together a lot of materials. Ariel and her team, the small farm group at University of Idaho Extension, also puts out a lot of useful type of materials. So that's kind of the end. I appreciate your attention. I hope this was useful and interesting. I'm happy to take any comments and questions by email after this presentation. Again, I wish I would have been able to be there live, and I wasn't. But I'll come back to this in just a minute. But I just wanted to say that I'll provide this slide set to Ariel and Connie to share with you. These are the references for each section of the presentation that I used, and that may be useful for just taking into consideration as you move forward. So again, just want to say thank you for the opportunity. Hope it was useful, and hope you have a great rest of your day. Thanks very much.